So, like I say, all we're doing now is just waiting to see where price goes. Now, this is one of the things that most people struggle with is just the general patience, especially when they're waiting for higher quality trades instead of just scalping in and out, which is doable, obviously, because we use the fair value gap continuation model um, as extra complements when using high time frame zones. And if you get an entry indicator on those levels, like if when we break it down to the 30-second, if we get like a long entry and we already know there's a strong chance we're going to go up based on a break of this when price eventually comes back to it, that gives us like a higher probability that the trade can work out. So we'll just go through and watch price. So obviously, if this was the first time that we've marked it up, you wouldn't have any idea really of where price is going yet because we're waiting for the indication when price breaks. So all you literally need to do is just wait, like I say, and just drag your box across. And the reason why I cover the wicks is because if we do get a candle close above, which is a key thing when doing markups, is that you want a candle close above your zone that you mark. And if it's above the wick, then even better. Price can leave, like a big wick and then come back down. And if it closed here, then it's technically not breaking the zone because the wicks aren't telling the complete story. It's like saying, yes, price can go up to here, but it closed here, which means the sellers at this point are the strongest around this area. Like they started here and they pushed price down, so we've left a wick, and the candle closes below. So it's technically not giving us any indication yet clearly where price wants to go. But here on this candle, the 12 p.m. candle, we get that first break. And again, we're using this for later. So again, just drag your boxes and look at how perfect price tapped into this zone, which is showing that this hourly support is quite strong. And this is why the higher time frame is more beneficial. So we get our first break, and we want to go by obvious breaks. So again, we're just waiting just to see what price does. Starting to wick above. And then boom, nice strong finish towards the end of the day. So this is why I'm saying like we want the strongest obvious thing because everybody else is going to be seeing this. And when like breakout traders get involved, they're going to see this initial break and they're going to go full port and they're going to push price up. But no one knows where price is going until price stops and starts reversing. So this is why we wait for the indication and don't trade it, because the breakout trade is going to get stopped out eventually because sellers have started to kick in. And this is the beauty of using the high time frames because now we can say that when price comes back to this level, that this is going to be our good target. And it's a reasonable target because, again, price has stopped here and it's being pushed back down by sellers. So we will just wait. And we can also see that this support, like we found a lot more support on the hourly here, which is higher than this one. So this is giving us more confidence that we're going to go higher. So again, we just play price out and we get even stronger confluences. And this is why not trading in Asia helps because this can take as long as it takes. So now we're starting to see prices starting to find new resistance. So we do want to mark that out. because this is now where price wants to go later on if we come back down to our level. So again, we're just dragging this out, and now this is something that we can use for the next New York session. This is why I'm saying, like, be patient, because you might see this initial breakout and then trade it, but you don't know how far price is going to go. Price could stop here, then come back down. So if you were still holding, then price came back below this level, you could potentially get stopped out. So it's worth waiting for like more stronger pushes, because we're using these strong pushes to determine our swing highs and lows. So again, we're playing price out. And now we're obviously in the new New York session. And we're taking things into consideration now of, are we still going to be bullish? Well, now the indication is finished, comes the correction phase, which is essentially just a way of saying that the pullback is happening. And then the continuation is when price gets to this zone, we take our entry above the zone, targeting this. So you can do all this on the hourly, but I like to also go on to the 30-minute and 15 just to see like more detail. And you can even use like this as like an extra complement for entry, since this general area price also broke above. By the time it came down, we were getting candle closes and a wick rejection off this zone, which we know was strong because that's where price broke out of in the first place. So this is a new entry signal for saying, okay, let's go long. So we can just simply now do the continuation portion, which is the entry point. And again, we're targeting this. Stops can be below the swing point. We're going to the hourly. So we can use this wick. But for ICC, I like to go with 50 points just to be safe. That usually is enough. And then we just play price out. And again, this is our take profit area. Doesn't mean that price is going to get there, because we can also see, like, if we use the same logic of support and resistance, price was finding support here, so this is potentially a good area to have your TP set. And then if we just play price out again. But if you're trading on personal accounts, obviously you can hold overnight if that's the case. But like I say, the TP is just what you feel comfortable with. Like if you're happy making 86 points, which if you're trading 2 mini contracts, then that's $3,000, and you made that in the first hour, technically, of US NY session. So that took an hour and 45 minutes. Now the reason why I say take entries in New York session is because look at the actual drawdown. We had our stop safely below this swing point, because if price comes back below this zone anyway, it's going to tell us that price is potentially reversing. But we had all the confluences that price is going to go up by, again, going on the higher time frame and clearly seeing bullish structure. And the only reason we would look for sells is if price broke below this zone, since this was the support, the resistance zone that should be the strongest with sellers because sellers pushed it down and it found support. So buyers were in control of support. So if you trade in support and resistance traders would sell as soon as it came here, targeting this. But then say they did it the same thing next day, like it was coming up towards it and they've put entries here, expecting it to go down, they would now get stopped out. So don't class this as support and resistance the way it's normally taught. We're basically doing the opposite. And since it's not even break and retest either, although technically on this day it was a break and retest, it broke out, retested the zone, and then came up. But what you'll see with ICT when you delve into it more is that price likes to come below these zones. So, like I say, if we're looking for sells later on, we want this to be broken since this is the key one that pushed up price of this. Price can come below here, but again, you've got swing points here, support zones. So even if price did come all the way down here and closed, we're still thinking bullish because it hasn't broken the key swing points of where we marked up in the first place. And that's why another thing I look for is the hourly wick, which you can clearly see here. So price came down, but buyers have all their orders pending at these orders at this order price, since this is where price broke out from traders. So it's telling everybody that buyers are strong above this zone and sellers are strong below this zone. So even if it did come down here, you can take your sells, but it's against the trend. The trend is bullish, which is why we've marked our zones out and why this trade works the most. So as soon as you see that hourly wick come into play, you can be a lot more confident in the trade because a wick is just a rejection. So if we're truly bearish, then the wick would be above this box and the candle bodies would be below, but we have literally rejected off this zone, which is saying that buyers are definitely still strong, and it's in New York session. So any kind of move that happens in Asia session or New York when it's an indication is going to be exaggerated when it comes to the next New York session because it's people are going to see it. So say they saw this in London session, just for example, then by the time the American stock market opens, where most of the orders are placed, they're going to see this and be like, okay, let's buy, buy, buy. So the move gets exaggerated. And like I say, this zone is only a soft TP because price had support here and then came down. But this is our main buy area, which gives us the better entry. So we can hold this. And then if price is truly maintaining its bullish structure, we can take the trade here because we've got now new higher lows, you see. So then we can play price up a little bit longer, see what happens. And then the same thing applied here. So obviously this is coming into the next day, but if you want a personal account, you can be holding this trade confident because what we're doing, we're making new higher lows. And we can also use this candle here as like a new indication. Even though technically it didn't break this, but since this came down and it didn't break below these levels, and then we've got new highs as shown, we can use this for later. So if we did enter in London session or whatever, we can enter at this level. And again, putting our stops 50 points. Because like I say, when New York session kicks in, it's very unlikely, unless the market just does a complete reversal, and that can sometimes happen. But most of the time, you're going to be able to trail this. And 20 points, 25 points is average that I use to hold instead of going break even, unless it's like, like 50% to whatever my target is. I might go break even there. But New York session's kicking in again here. And again, look at the drawdown. Because this is why we're keeping the zones here, because we're realizing that price is more likely to continue, because that's what market structure is it's going up and down in the context of it's making higher lows and higher highs. And as long as they're not getting broken, then we can stay in a trade or use that indication above a zone to take the next trade, which happened here. And again, breakout traders are seeing price break above here, and they're all pushing and pushing and pushing, but eventually they get stopped out. So when it comes to the next day, we can now take a trade above here because we know that price is giving us signals. Even if in the same day, like even if this was the first time you got a trade, you were taking a trade on the hourly, we have this big candle above this zone. So it doesn't even have to be the next day. It can happen in the same day sometimes, like this day. And what's even better is that we start seeing the wick. So if we break it down on the 15-minute, is that price came down, left a wick, didn't break this low where price is currently pushed up from. So we can take a trade confidently, at least to this level. And then this just happened to be where it stopped off, which is interesting. So that's why I'm saying, like, these are soft targets. If you're seeing price then starting to come down, then you've still got to make the decision whether you hold. But even 50 points for a 1-to-1 is still good, and especially since this trade you ended up only risking 16 points.